Here's a shocking fact. 9 out of 10 traders fail. They don't just lose a little money. They blow their accounts, quit trading, and walk away convinced the market is rigged. And most of them believe they failed because they didn't find the right strategy, or the right indicator, or the right trading signals. But that's not true. The truth is far more uncomfortable. Traders don't fail because of the charts. They fail because of their mind. In this video, I'm going to show you why psychology, not strategy, decides who wins and who loses in the markets. And by the end, you'll know how to avoid falling into the same traps that wipe out the majority of traders. When you sit down to trade, your biggest opponent isn't the market. It's you. Think about it. Every candle, every price move, every sudden spike is triggering emotions in your brain. Excitement, fear, greed, frustration. That's why trading is so much harder than it looks. You can memorize every chart pattern and indicator on Earth, but when real money is on the line, it's your decision-making under pressure that determines whether you win or lose. That's why 90% of traders fail, not because they can't read charts, but because they can't master themselves. Let's talk about fear. Fear is one of the strongest emotions in trading. Fear of entering. You see a setup. Your analysis is correct, but you hesitate. You tell yourself, what if it goes the other way? You freeze. The move happens without you, and you're left watching profits slip away. Fear of losing. You finally take a trade, but the moment price moves slightly against you, panic sets in. You close too early, lock in a tiny loss, and then watch the market reverse back in your favor. Fear makes you second-guess yourself, abandon your plan, and miss opportunities. The painful part? Fear doesn't protect you. It creates the very losses you were trying to avoid. Now, on the other side, there's greed. Greed shows up after you finally taste success. You're up a few pips, but instead of sticking to your plan, you think, what if it keeps going? You hold longer, the market turns, and your winner becomes a loser. Or worse, you win a few trades in a row. Suddenly you feel unstoppable. You double your lot size, take risks way outside your plan, and one bad move wipes out weeks of progress. Greed makes you believe you're smarter than the market. But here's the truth. The market doesn't care about your feelings. And the moment you let greed take over, you're handing your money back. Here's where most traders get it wrong. They think success is about finding the perfect strategy. But think about this. 2 traders can use the exact same system. One grows his account slowly and consistently. The other blows up. Same charts, same rules. What's the difference? Discipline is boring. It's entering only when your setup appears. It's cutting losses quickly and letting winners run. It's respecting risk management, even when you feel like gambling. Strategy is just a map. Discipline is what actually gets you to your destination. And without it, even the best strategy is worthless. Most beginners fail because they never give a system time to work. They jump from one strategy to the next every time they take a loss. It's like planting seeds, then digging them up the next day because they haven't sprouted yet. There is no holy grail strategy. There's only consistency. The market rewards those who can execute one plan over and over again, not those who chase shiny new methods every week. Here's another silent killer: ego. After a winning streak, traders feel invincible. You start breaking your own rules because you think you've figured it out. But the market has a way of humbling every ego. Overconfidence is dangerous because it blinds you to risk, and risk ignored is account destroyed. A humble trader survives. An arrogant trader always blows up. It's just a matter of time. So how do you avoid becoming part of the 90%? Have a plan before you click buy or sell. Know your entry, stop, and target. Risk small. Never risk more than you can emotionally handle. Accept losses as part of the game. They're not failure. They're tuition fees for learning. Focus on consistency, not excitement. Your job isn't to win every trade. It's to survive long enough for your edge to play out. The bottom line is this. Traders don't fail because of the charts. They fail because they never learn to master themselves. If you can control fear, tame greed, and stay disciplined, you'll put yourself in the 10% who succeed. The market is unpredictable, but your mindset doesn't have to be. And that's the trader's mind.